Wanted to take a look at the stock market today. We got some big news just yesterday, and of course, this is shifting the entire stock market today, especially, say, SPY stock and QQQ. So I wanted to break down first Nvidia just briefly, but there's an 800-pound gorilla sitting in the room. Now, on the one hand, that 800-pound gorilla can be fed. On the other hand, you might run out of food after a while. Let's break down the stock market today. I'll show you what I'm looking at and what to think about coming into the future. The biggest story for the stock market today, of course, Nvidia stock soaring about 15%. Now, the options market had been pricing in the potential of a 10% move in Nvidia stock. Of course, this has kind of been blown out. This has pulled up everything else. The SPY stock today is up in record territory, and NASDAQ is pushing higher as well, of course. Nvidia's stock, market participants were worried that potentially there would be a slowdown in growth. Growth is maintaining at a rapid pace. AI stocks are, of course, going to be the story for some time. And it's something that I've really been focusing on because you can get some really large gains in AI stocks. In the meantime, Nvidia stock, I've got all of the Magnificent Seven. I'm going to show you their yields. It's a little overpriced right now, but it's not bad. Certainly within wheelhouse for a value investor. But this is really the biggest story. Nvidia stock, its surge. AI stocks, broadly speaking, moving higher for the stock market today. But this is the one thing that I wanted to kind of focus on. I got this out of, this is a screenshot from CNBC. Fed officials express caution about lowering rates too quickly. Yesterday we got the Fed meetings, minutes from the Fed meeting, and this is your 800-pound gorilla in the room. The Federal Reserve is not in a position to lower interest rates anytime soon. The market has been punting things down the road further and further. They initially thought March would be the first cut. They blew that out. The CME has a gauge as to when they think that the Federal Reserve is going to be lowering interest rates. After the minutes yesterday, June is looking like a fairly low probability that lowering interest rates continues to move further and further out in 2024. I do not believe they're going to be lowering interest rates at all. Simply because look at employment at this point. Employment is still strong, given the information we have today. It really kind of goes back to the stimulus program that they did with the Anti-Inflation Act, whatever it's called. This really spurred growth. Employment maintained at very high levels. Unemployment is not moving upward. Inflation, you're seeing personal incomes and personal expenditures starting to creep back upwards. This will push inflation higher. The Fed, if they were to start lowering interest rates right now, would light up inflation in a really ugly manner. But the good news about this is the mortgage rate is starting to move back upward. Now it peaked about 8.25 back in October, came down to about 6.5. Now it's starting to push to 7.25 area. This will slow down the housing. Housing prices were 70% of the gain in inflation that we saw previously. So on the one hand, we have a really strong economy. Great. On the other hand, inflation is likely to tick back upward. Now I've been talking about this for 6, 7, 8 months now, that I felt through 2024 the stock market would perform very well going in through the summertime, and then things are going to start getting ugly in the fall. I put out my stock market prediction for 2024, and that's basically what I said. Given that, the stock market likely to continue higher as of right now. But if we keep getting data points that show that, inflation is starting to tick back upward, that would force the Fed to reverse what they've been saying and say, no, we're not going to keep rates where they are and eventually lower them. We're thinking about raising rates. But merely talking about it will push yields higher in Treasury, and that could affect the economy somewhat. They may do a lot of talking before they do any action. This is an election year, should be interesting. But going back to other things such as Nvidia stock, here, this is the close of yesterday. And what I did was I took one share, the next 4 quarters, earnings per share, what are projections by analysts, the current price of each of these stocks. This was last night's close. Some of these stocks have shifted. So if the stock price is higher than what it was at yesterday's close, the yield will go lower. Nvidia, 2.90%. Now, Nvidia at one point, I actually put in the actual, it was trading about 3.1% yield. That yield is narrowing. But the thing with Nvidia stock is you need to look even further beyond, say, 2024 earnings, 2025 earnings, because there will be growth in other segments of the company that are going to see increased earnings. Tesla's another one. Tesla stock, the yield 1.575, that's a bit on the low side for a value investor. But the car segment of Tesla isn't exactly what you should be looking at when you're looking at Tesla stock. Instead, Tesla stock is one of those things that you look at the other divisions, the services divisions and the batteries and other things where the growth rate is over 20% on an annualized basis, and the earnings are really going to start contributing to Tesla stock and their bottom line. So looking at these, don't just look at Tesla stock and say 1.57, no, I wouldn't touch it. Nvidia stock 2.90, that's a bit on the low side for a value investor. You're looking to buy this from a long-term perspective. That being said, we go back to what I just mentioned about the Federal Reserve. Should the Federal Reserve be forced to start talking down the economy and start getting assertive about inflation and higher interest rates, these yields you'll see, because of those stocks, are going to go lower. The yields will go higher. If you're looking to pull the trigger from a value investing standpoint and hold on to any of these stocks, you want to do so waiting for that dip. And we're probably going to get one, but it's probably not going to be till September or so. We may see some gains. Until then, Warren Buffett, I think, sums it up best when he says, be greedy when others are fearful, be fearful when others are greedy. Right now, others are being greedy. Eventually, you can be greedy. Moving forward, here's the SPY stock today. Actually, this is the S&P 500. And if you look, new record, I saw a recent 5,075 print. By the time I put this chart up here, kind of becomes really old because this market is moving. The stock market today is really kind of pushing back upward. The move lower that we just saw was a lot of fear that Nvidia's rate of growth wouldn't be as high. And it's something that I talked about, that the potential of that rate of growth could diminish. And because of that, AI stocks would really sell off. As it turns out, SPY stock today up, hitting records, S&P 500 hitting records as well. But what's happening with the U.S. 10-year Treasury yield after the Federal Reserve's meeting minutes? Pushing a little higher, 4.325, pushing up to 4.35% for the U.S. 10-year Treasury yield. This is an economy today that can easily operate with 4.35% because of all the outlying factors, such as the anti-inflation bill that was passed, that's really kind of propelling this economy forward. For now, the Federal Reserve, should they start getting real serious about inflation, if we start to see an uptick in inflation, that could really derail everything. I'm waiting a few months before we finally get to that point. It may not be till September, October or so when we start seeing that kind of noise coming out of the Federal Reserve. But keep this in mind. This is your 800-pound gorilla in the room that you can feed for now, but eventually you might run out of food. The VIX, dropping hard. I'm an options trader, a stock options trader. We live and breathe by following the VIX. And I just put some videos out the past couple weeks. Last week it was past 2 weeks where I said that the VIX would fall right back downward. I've been playing the VIX, selling calls. I did not buy any puts on this move, but I did feel like the VIX popping higher was short term. If the VIX starts shooting downward to about 12.5 to 13.5, I'm likely to step in and start selling puts against UVXY stock. It's one of the ETFs that trades off the VIX. It's easy money. It's not a whole lot, but when you put a lot of sort of tentacles out there and you're constantly trading a few things here and there, you can continually bring money in. So I'm looking for the VIX to fall a bit further, and then I'll probably stop in and start selling UVXY stock puts, just letting that option premium collect. Gold spot. Now, gold on the news last week, inflation news came in. You could see where the U.S. 10-year Treasury yield popped higher. Expectations were that we'd see higher interest rates, and gold sold off. Gold has rebounded. And I don't expect any real big major moves in gold yet. If we continue a little bit higher, I'm a big silver hound, and I'll probably be stepping in, selling a lot of calls if we start to see more and more inflation numbers that are not cooperating with the Federal Reserve's sort of theme that they've got right now. Because what will happen is interest rates move higher. The Fed will talk them up first, talk about their fears. Then eventually, with those higher interest rates, the price of gold will come down probably a lot. I may put on a risk reversal, selling calls, buying puts, one of my favorite weapons of choice. WTI oil spot, of course, moving a little bit higher. This is another one that if the Federal Reserve needs to step in and start taming inflation, you will see West Texas oil dropping lower. Until then, we haven't seen much of a move. What's going on in all the piracy we're seeing could have an effect and push supply upward. We're seeing ships have to sail an extra month and go completely around Africa. So this could potentially be a price mover for the price of oil. We could see this moving higher. US dollar index initially spiked higher on the potential of higher interest rates, has eased off, kind of moving back upward. I'm expecting the dollar to kind of sit here for a while, but eventually kind of moving higher as we see more and more economic data pieces showing up that inflation isn't going along with what the Federal Reserve wants. Nonetheless, wanted to take a look at the stock market today, break down what's affecting the stock market today. Huge rally in the stock market today, of course, and there's still a lot of value in a lot of stocks when it comes to individual stocks per se. Now, some of those magnificent 7 stocks, of course, are a little overpriced, but anybody stepping in would be looking for much longer term. So the reversal we saw in the stock market today with regard to what's going on with Nvidia's sell-off and the concerns there certainly weren't warranted. Stock options prices were looking for a 10% move. They saw a 15% move. I don't think that the Nvidia stock share is going to start soaring more like it did previously. It'll probably stay elevated and continue to move higher incrementally, but that 800-pound gorilla in the room, make sure to keep your eye on that because eventually that could crack. Nonetheless, that's your stock market review for today. Make sure to hit that like and follow button if you're looking for this kind of content where I break down these kinds of videos, all the elements of the stock market. We'll see you in the next video.